The U.S. has invaded Iran, the Ayatollah is dead, and the biggest question for their economy is what happens to oil production? History tells us that political instability has been very bad for Iranian oil production, so let's look at it. The Iranian oil industry was nationalized in 1951 by Prime Minister Mohammad Mossadegh and has been run by the National Iranian Oil Company since then. But there have been a lot of up and downs since then. Iran has the third largest proven oil reserves in the world after Venezuela and Saudi Arabia, but ranks 9th in production, about 3.5 million barrels a day versus Saudi's 10 to 12 million. Why is Iran's production so low despite having so much oil in the ground? Well, it has everything to do with decades of sanctions and war and underinvestment. Before the revolution, Iran was OPEC's second largest producer, pumping 6.6 million barrels a day in 1976. 1978 is when it starts to get tricky. Oil workers went on strike to protest the Shah, and production fell 75% in a year, from 6 million barrels a day to 1.5 million. And then, of course, you have the revolution and the hostage crisis, and Jimmy Carter responds with the first sanctions and also freezes $8 billion of Iranian assets in America. After the revolution, production rebounds modestly, but then in 1980, Iraq invades Iran and a brutal, bloody 8-year war starts. Production is hammered. It falls to 1.3 million barrels a day. But the real problem is that Iraq and Iran are firing on each other's oil tankers in the Gulf. This is when you first start to see U.S. naval presence in the Middle East to protect oil shipments. Meanwhile, through all of this, Iran's oil fields are getting older, and they can't access the international technology needed to maintain them, which of course hurts production further. After the end of the war, Iran starts to rebuild their production, and by the early 90s, they're at about 3 million barrels a day. Then in 95-96, Bill Clinton moves to ban U.S. companies from participating in the Iranian oil industry and punish foreign companies that do. Despite this, a lot of European, Chinese, Russian companies are still operating in Iran, and by 2003, their production is at 4 million barrels a day. But around this time is when the nuclear program starts to become a concern, and you start seeing sanctions to try and stop it. One thing that's important to understand is that Iran has a lot of oil in the ground, but they don't have a lot of refining capacity. They have to export it to countries to refine it, who then import it back to them as finished products like gasoline. In 2010, Obama enacted sanctions targeting these imports, and then with the EU, prohibited large-scale investment in Iran's oil sector. They cut them off from Western financial markets and sanctioned the Iranian central bank. And the impact was pretty swift. Production fell 35% in a year. There's so much confusion in the world right now, and markets can really help us understand what's going on. Subscribe to Robbie World for more. I post every day. Then Obama used this sanctions leverage to cut a nuclear deal with Iran, and by 2017 their oil production was back at 3.8 million barrels a day. Then of course Trump comes in with his maximum pressure campaign, and by 2020 oil production is its lowest since 1989, under 2 million barrels a day, which of course is a huge hit to the economy. Iran earned $9 billion from oil in 2020 versus $53 billion in 2017. This is when you start to see so-called shadow fleets of tankers illicitly selling Iranian oil. A lot of this oil is sold under market value because of the sanctions risk. So it's good for Iran because they need the money, and the buyers are getting a good deal. These tankers transfer the cargo at sea versus in a port in a kind of black market to evade sanctions. When Biden comes in 2021, it's not so much that he lifts sanctions as it is that he's less aggressive in enforcing them. And China takes advantage of this. Oil production is back above 4 million barrels a day, and a lot of that is going to China. Then, of course, 2025, Trump comes back in. By the end of the year, oil production has fallen by 25%, and today the Ayatollah is dead, and the next steps for the country and its oil production are unclear. When you look at the history, you see how much Iran's oil industry has suffered from all the instability. This is not a well-oiled machine like you have in Saudi Arabia. The country has been run from an ideological point of view, not an economic point of view. And without knowing who is going to take over this country and their oil, it is hard to know what the strategic approach to the oil industry is going to be. We know that China will be watching closely. Iran is their second largest oil importer, so they have a definite vested interest in the outcome. In the short term, we will definitely see oil prices rise. The markets will open this evening, and traders are expecting the price to jump $20 to $25 a barrel. both because of Iranian disruption and the disruption of the Middle East in general. Oil tankers have already been avoiding the Strait of Hormuz, the 21-mile waterway between Iran and the UAE, through which 20% of the world's oil travels. And of course, higher oil prices is inflationary, which is in direct contrast to Trump's stated desire for lower interest rates and affordability. We're a bit working at cross purposes here. This is, of course, unfolding hour by hour. I'm watching the whole thing. Subscribe to Robbie World for more.